The philosophical foundation of an Islamic financial system goes beyond the interaction of factors of production and economic behavior, as the Islamic system places equal emphasis on the ethical, moral, social, and religious dimensions to enhance equality and fairness for the good of society. This brings to the fore the need for corporate governance, which is critical for boosting investor confidence in the non-interest finance market. Good morning and welcome to another episode of the Islamic Finance Weekly, where we discuss key developments in the non-interest finance market. On today's show, we'll be discussing strengthening corporate governance in Nigeria's non-interest finance market. The topic will provide insight on some of the crucial issues related to corporate governance in the Islamic financial institutions in Nigeria. To broaden the conversation, we have on the program today the Managing Partner, Metropolitan Law Firm, Mrs. Ummahani Amin. Good morning. Thank you very much for joining us, Mrs. Ummahani.
Thank you. Thank you for having me. Thank you very much.
Welcome. So let's begin the conversation with the fact that since the 2008 financial crisis, corporate governance has been given top priority in stabilizing the global financial system. So can you share with us how this is being adopted by Islamic financial institutions?
So corporate governance in Islamic financial institutions, or non-interest financial institutions as they're referred to in Nigeria, are generally similar to their counterparts. That's the conventional corporate governance. So non-interest Islamic financial institutions are also subject to the Nigerian Code of Corporate Governance of 2018. However, non-interest financial institutions are unique in the sense that they are required to have a Sharia supervisory board. The body is a council of experts versed with the Sharia, whose core tasks are to undertake audits to ensure that the non-interest financial institutions and its financial products are Sharia compliant, and also to provide advice to the non-interest financial institutions on the distribution of income to shareholders or the disposition or investment of account holders. It also focuses on providing guidance to the non-interest financial institutions on the wider social role. There are also a national Sharia board with the overall authority of the Sharia governance and framework policy. This is the Financial Regulatory Advisory Council of Experts. That's the phrase by the Central Bank of Nigeria. So in a nutshell, the Sharia aspect of the non-interest Islamic financial institutions corporate governance is guided by each institution's Sharia supervisory board, with phrase as the overall head to look at what the others are doing.
All right, Mrs. Ummahani, I know the practical objective of corporate governance is to put in place the company's business objective. So one of the challenges in the Nigerian business environment is the adherence to corporate governance principles. What are the standard business governance ethos that shapes Sharia-based enterprises?
So usually, Islamic finance is predicated on the principles of Sharia. These overreaching sources of law, when adhered to, establishes the business governance ethos of non-interest financial institutions. Seeing as there are other identifiable practices in the products of non-interest financial that a non-interest financial institution can offer, the type of business it can transact in, and the guidelines it follows on transaction structuring, Islamic finance has a degree of certainty in relation to non-interest financial institutions' mode of operations, in contrast to their conventional counterparts. So the fundamental ethos of Islamic finance is the efficient and effective mobilization of capital for the benefit of the real economy. It is a real sector-driven and and it promotes risk sharing in all its financial transactions. Transactions in Islamic finance are driven by productive activities, and financing are based on trading and commerce as an alternative to collecting the interest and activities of those involved. So conventional finance, however, disconnects itself from the real sector, and it is only given loan to clients who do not take any and do not take part in whatever the risk sharing formula is. So the clients usually take the risk, while Islamic finance is focused on credit risk, you know. So in contrast, an Islamic financing arrangement engages itself with the purchase of commodities or underlying assets to comply with Sharia, and by doing it carries a risk unique to Islamic financial institutions, known as or business risk. In investments, risk sharing means the investors are seeking profits with this expectation that losses can happen based on the Islamic legal maxim, Islamic finance legal maxim that says profit is accompanied with risk sharing. So in trading environments, it is also known as risk taking. So basically, because of the Sharia, Islamic finance focuses on real economy and puts significant emphasis on risk sharing by contrast to its conventional finance, and that risk is shared with consumers, but and is also transferred, not transferred in total to them.
All right. From your point of view, and I must say that you are correct, and an efficient and effective Islamic governance system is of the essence when it comes to corporate governance to Islamic financial institutions. Now, in the past 8 years, there has been concerted efforts to drive business integrity in the operations of institutions and organizations in Nigeria.
So the Sharia itself is a source of law. It is the primary law which these non-interest financial institutions must abide by. So to ensure that this occurs, the Sharia advisory boards of these non-interest financial institutions are usually tasked with engaging in regular audits of their business activities and products. They are also a sort of internal watchdogs that steer the non-interest Islamic financial institutions towards operating within the Sharia and consequently doing business with integrity. In terms of laws, various regulators have published guidelines on how non-interest Islamic financial institutions should work and practice, such as the CBN with the Islamic banks. You have NICOM with Takaful, Islamic insurance. Yes. You have PENCOM that came up with the laws of 6 right now. And then, of course, the Securities and Exchange Commission is dealing with the capital market. Aside of our legal, of our local rules, we have and regulations. We also have the IOFI. Yes, that's the accounting and auditing standards for Islamic financial institutions. These fatwas or legal rulings on accounting, auditing, governance, ethics, and for Islamic financial institutions, which is based in Bahrain. The IOFI's core objective as a body is to harmonize and standardize Islamic finance practices and financial reporting in accordance with the Sharia. Their guidelines are the gold standard for ensuring non-interest Islamic financial institutions operate within the confines of the Sharia.
All right. I also heard that Bofia Act 1991 is considered to pave the way for Islamic banking in Nigeria. And we have the international standard like the IOFI, as you've mentioned, and the IFSB, Islamic Financial Services Board. So in the secular economy, how do Islamic laws operate to avoid conflict in the case of a breach of business agreement that was guided by the law of contract?
Usually, the law of contracts allows for individuals to agree upon the manner in which they want to transact with one another. Contract laws allows parties to the right to choose the type of law or jurisdiction in which their contract shall be subject to. As such, in the Nigerian Islamic finance ecosystem, it is common to see contractual clauses stating that the contract shall be governed in accordance with the laws of Islamic commercial transactions. This is perfectly acceptable and common in all, secular economies where Islamic finance is being transacted. So you find out that all Islamic financial transactions, you have the clause that says in case of disputes, they should be, but usually, of course, if there's nothing like that, then it goes back to the conventional courts to be dealt with, where experts in Islamic finance will also be called as witnesses to come and give evidence as to how this should operate.
All right. As a renowned legal practitioner, my next question to you is that, can Islamic laws of a contract be applied in a nation like Nigeria that is considered secular and is guided by common law?
So I believe that the rise in adoption of Islamic or alternative finance structures in Nigeria, mainly governed by contracts in line with Islamic principles, provide an affirmative kind of response to the enforcement of such contracts in Nigeria. Parties to a transaction usually could simply agree to engage in an ijara, salam, or istisna, and produce the relevant standardized contract to reflect their contractual relationship in line with the Sharia principles. Nigeria's legal framework allows contracting parties to determine their legal relationship in accordance with their preferences, including their religious beliefs within the ambit of the law. So, as the form or object of the contract is not illegal under the extant law, it is enforceable by the Nigerian courts. And so, in the financial sector, the standardization of Islamic contracts is underway now with the development of regulatory framework for using Islamic finance structures, the assimilation of Islamic finance into the current legal and regulatory regime will also create equality of access to the financial markets. So we should also know that the Nigerian government's legislative and regulatory approach towards Islamic finance is designed in such a way that it will facilitate a level playing ground that enables a large Muslim demography to practice finance in accordance with their faith. So we look forward to the regulations being put in place, and we'll see that is almost seamless when you want to deal with that.
Right, a very interesting point you made, Mrs. Ummahani. So from your experience and expertise, what are the common penalties associated with an infraction of an Islamic contract, and how is enforcement ensured?
Okay, so using the banking sector as an example, in the conventional world, a bank gives you a loan, demands collateral for the loan, for that loan, and continuously charges you interest. If you default, then it charges you compound interest. So you find out that your interest keeps compounding. It's not even the usually agreed one. Because of default, it keeps on compounding. Obasanjo was said at the World Bank one time about Nigerians loan he said it keeps interest is the worst thing that can happen to any nation in the world, and because it keeps compounding and compounding. He mentioned some amounts that Nigeria borrowed, and now it has astronomically gone to a place where you can't even deal with it. So yes, so that doesn't happen in Islamic financial institutions. Usually, you agree that in case of default, there will be a penalty, and this penalty does not even go to the bank itself; it goes to charity. Some of the ulamas had said that it should go to a charity anonymously. You can't even say, for example, if Jaiz collects penalties for default of loans, which will be agreed with the client that in case of default, you are going to pay so amount. So when there's default, you pay this amount, then it goes to charity, and it goes to charity without even mentioning that it is from Jaiz. So these are the difference between an Islamic financial transaction and a conventional transaction. And you find that enforcement of contracts usually because of the into this transaction because your because of involved in it, so you won't even want to have anything to do with default. But in case it happens, it's business, so it can turn out like that. You just pay your penalty, which goes to charity, and which in turn helps the wider society.
All right, so you've been talking about the legal framework in the non-interest market services, and my question to you, does the Islamic concept of corporate governance hold individuals to higher standard than the common references to good corporate governance conduct?
So I think this question has a subjective element to it. My opinion on this question is yes, I do think corporate governance in Islamic finance holds individuals to a higher standard. I think so because they are predicated on the Sharia, which promotes the business or how business is to be conducted in a sustainable and ethical manner from the first instance. So and then so why I said all of these things, Islamic the Sharia also frowns against things that should not be done properly, like gambling and speculations and so on and so forth. You can't deal in unlawful products and services. And why I think this is a subjective question, is because individuals from the conventional sector would largely disagree, as they seem to view these laws as too restrictive, so to say. However, based on my own moral conviction, I do think that the presence of the Sharia and need for has added the need for checks and balances, such as the Sharia boards, will now genuinely enhance the practice of corporate governance for non-interest Islamic financial institutions.
All right. I'll say in designing Sharia governance framework, I'll say corporate governance is of necessity to the Islamic financial institutions. So as we wrap up, what are the guidelines for improving corporate governance for Islamic financial institutions in Nigeria? Are the provisions for this in the nation's corporate governance code?
So in my opinion, the Islamic finance space has already the Islamic finance space already has in place a framework to promote good corporate governance practices. Yes, infractions do occur, but these are usually in scenarios where this framework is not strictly adhered to, or where human error is usually apparent. A lot of responsibility is concentrated in the Sharia supervision boards, as they are the internal arbiters of the non-interest Islamic financial institutions. Like we have the phrase in Nigeria, and IOFI and FSB, and I have done which have done very excellent jobs, for to set up the standards for boards to and financial. For Nigeria, how it is in Nigeria, we have our regulations are strictly of high standard usually. And when we've been working on that, I know NICOM, SEC, NDIC, CBN, and even the stock exchange have done a lot of work to see that regulations are put in place. So if we adhere to them strictly, I don't think we will have any problem. Our corporate governance issues will be sorted out and adhered strictly to.
All right, the managing partner, Metropolitan Law Firm, Mrs. Ummahani Amin. Thank you very much for talking to us about the importance of corporate governance in the Islamic financial institutions. Do have a great day.
Thank you, Bukola. Thank you. Thank you for having me.
Yes, you're welcome. Have a nice day.
And you too. Bye.
One of the roles of the Sharia Supervisory Board is to advise the Islamic financial institutions on Sharia matters to ensure conformity with their role in their operations at all times, endorsing and validating relevant documentations pertaining to the products and services of the Islamic financial institutions. Islamic financial institutions have the duty to ensure the compliance with Sharia principles in all aspects of their products, instruments, operations, practices, and management, which will be achieved by the establishment of a proper Sharia governance framework. The international institutions have been established to ensure that there is consistency in Islamic finance, like the Accounting and Auditing Organizations for Islamic Financial Institutions and the Islamic Financial Services Board. And that brings us to the end of today's session. Visit ProShareNG.com website to read more on Islamic finance. Click on Web TV Banking channel to watch the Islamic Finance Weekly videos. You can also follow us on our social media platform displaying on the screen. Many thanks for watching. Stay safe, stay healthy, and see you next week Friday for another exclusive interview.